What common financial mistakes do you see investors repeatedly making, and how can they be avoided? I think one of the biggest mistakes that people make is that they don't examine where they are in their retirement cycle. So if you're just starting out building wealth at your first job, you know you have a long time horizon. You want to put money away for many, many years, build wealth. The only way to really grow and build wealth is to buy when the market's up and down. You're not worried so much about timing. It's not timing the market, it's time in the market. That old adage I know you've all heard before. But you know what? When you get close to retirement, that's where there seems to be a huge disconnect between advisors that give the same advice to everybody that comes in their door and more specialized advice for those advisors that are specialists in retirement income planning. How do you know if you're working with a retirement income specialist? You know they identify your time horizon so that we know we don't have any oopses in your portfolio right before you're ready to retire. Not the right time for that. They're advisors that know how to identify risk. If you don't know what the risk of your portfolio is, how are you going to know whether it's an investment that you can sustain throughout 20 or even 30 plus years of retirement? Also, everybody that I talk to wants maximum return for minimum risk, but they never ask themselves, maximum return for what purpose? I would say 9 times out of 10, most people would pick income. Being able to draw an income stream from your investment is probably the most important feature of the investments that you hold throughout your retirement. So keep that in mind. Make sure you're with an advisor that's a specialist in income planning if you're someone that is within 5 to 10 years of your retirement. Otherwise, invest in the S&P 500 and go for the gold because you got lots of time to build the portfolio.